Welcome back to another video. This is Crypto Ryan here, and today I'm going to do a video on XRP because I do recognise it's been quite a while since we updated on XRP. I think really the most of our videos outlining on XRP down here that we was expecting that 100% move, and you can see from the lows down at about 29 to 30 cents, nearly hit 60 cents today, so that is in fact 100%. So I mean, it's a really good move. It's nice to see, and it just proves that after all of these times in cryptocurrency, you wait all of these weeks, you go through a bit of pain, a bit of accumulation, people get bored saying that XRP is going to do nothing, and then in the space of a couple of weeks XRP flies to the upside and everyone comes back into the market wanting to buy at these zones. But I did share something the other day on Twitter that I think might just suggest XRP might need a bit of a pullback, although I do expect these wicks in the higher time frames to be filled to the upside first. Probably a bit of a pullback down to this 40 cents region, set that 40 cents region as support and build a nice foundation there before then a move to the upside. So I'll just share what I tweeted out and an update on what we tweeted back in November for XRP and the fractal that we've been using to identify this move to the upside. But if you haven't already, guys, smash this video a like, it really helps, and I do appreciate all of the recent support that I'm getting on Twitter and YouTube. It's growing a bit faster than what I expected, so again I do appreciate that. And yeah, let's get into it. This was the potential setup that we had for XRP back in November, identifying, the risk to reward for a nice potential move to the upside. That 55-60 cents region was really looking for that first take profit for around a 100% move. You can see if we jump back into the charts, that's exactly what we've got. So using that fractal, it really is why I'm expecting that move back down. We've taken the highs, taken this liquidity. Everyone wants to jump back into the market up here. Even if we get some wick fills to the upside in the coming weeks, still would expect that move back down in a possible ABC correction, WXY. We don't know what we're going to get, but using that fractal that led to the upside, we could identify, if we are expecting a bit of a pullback, this is not the zone you want to be entering. The zone to enter for XRP was down here when we was identifying, putting out them videos saying, possible 100% move coming for XRP. That move has happened. The lower time frame traders have been able to benefit from that. There will be a lot of profit taking here, so would expect that bit of a pullback for them profit takers to re-enter the market, the big whales to take that 100%. The big accumulators do not need more than 100% to benefit massively, whereas the small people in the market, the people investing just small amounts, do need thousands of percent, which is why people are always chasing those 1000% gains, whereas a simple 100% combination of different trades can really add up and compound in the future. But people don't have the patience for that. People do want to enter the big green candles. So thinking about this logically, as all of the late market participants come back at the top of this big green candle, we would expect these liquidations to be down below, because as people enter longs up here, the breakout traders, there will be liquidations set in the market for the market makers to go and hunt. So an easy way we can get an identifiable zone for that is just pull the retrace from the high to low, and you can see the confluence here for these highs coming in down at the 61.8%, or at least the 50% here down at the bottom of this big bullish wick and big candle fill. Would expect something like this. So I'm not, we are picking at 20-30% moves here. We've had a nice 100% move. Would it be out of the ordinary in cryptocurrency to get a 100% move and at least a nice retrace back down to the market 30-40%? We see it all of the time, so never really want to be chasing the big green candles. You need to be buying the lows, you need to be buying the fear, and then entering and being able to take profit and then hedge short to then be able to benefit from the moves to the downside. And that is where you need to be playing the market. But it does require a lot of patience. It sounds easy, it sounds simple, and it really is, but it just takes that bit of patience in the market to be able to benefit from that. And you will see now, I've been in cryptocurrency for quite a while now, and I always get messages from people, saying, is it a good time to buy when they see these big green candles? And whenever I get them messages, it's a sign for me to say, let's not get greedy. Let's at least take your initial investment out and wait for that retrace back down. And one of the great things with anticipating them retraces and the pullbacks to the downside, let's say we do come back to that 61.8% or the 702, it's not going to change too much. Even if we go and set a new high, the pullback is going to give practically or similar extensions. And you can see the 361, the 461% retrace to the upside. They both align sort of at this area that we are looking on the higher time frame. If we zoom out, for that higher time frame trend line retest to the upside. So this could very easily just be your first wave, second wave, and whether it's a corrective move to the upside or we are impulsing, we get a lot of confluence up here. Imagine the short in stop losses above this area, the liquidation candle that would come in up here, the big green candle. Imagine all the FOMO up here. People would love to buy, they'll want to buy, all the narratives will come out. The central bank digital currency, is Ripple going to be used for liquidity? You know, these are all narratives, and it comes down to them fundamentals, but these narratives only follow price. When price is down here, all you hear is that the Ripple and the SEC, the lawsuit is going to fail and we're just going to go set new lows. But then when you get a nice pump to the upside, people want to chase back into the market, and they would want to get out of the market on this retrace, and they would not be expecting that big major move to the upside that we're anticipating. And we've been anticipating this for quite a while, so just anticipating these short-term moves on the lower time frame, we can sit back, relax, let the market do the work, and let the late market participants come in, provide that liquidity, and then once again we can benefit from the moves up and down. When we zoom out onto the monthly time frame, you can see this cluster of price action that we had back here before the big breakdown. No real retest, confluence with the trend line retest to the upside. 361, 423%, 461% retraces to the upside. For that potential move down, I think it's perfect. I think we're really setting up the game plan here for XRP. I think it's all lining up perfectly for the late market participants to once again be punished. And it sounds harsh being able to say, you know, the late market participants buying the highs, but we've all been there. The market just teaches you a lesson, and sometimes it takes people longer than others just to learn that lesson in the cryptocurrency market. So really for XRP here, the game plan is to stay calm, sitting back, relaxing, and letting the market do the work, being able to benefit from them short-term moves and also the higher time frame moves, having that long-term spot position and also shorting hedges to be able to benefit. If the market continues up, the spot position and the holdings continue up and you are able to gain. But if the short hedges don't quite work out, you're only risking a small percentage, you know. So hedging in the market is not always a bad idea, especially if you've got positions in spot to be able to cover both sides, and that is how you benefit from both sides of the market. People say, you know, oh, you're saying this, you're saying that, it could go either way. Well, realistically, the market could go either way. We could continue up, we could go back down, but having them spot positions built here, being able to sell a small percentage, maybe 10, 20, 30%, get that initial investment back, being able to hedge with shorts with those profits. If the market continues up, the 70% of your spot position goes up, you can sell some more at the highs. If your short position comes in nicely, then you also benefit, and you can add to that spot position down here. There's all these factors that come into play when analysing and taking profit and navigating the market, but these are just things that you can do on the short term, just being able to analyse the market psychologically. Big green candles, people want to buy. Big red candles, boringness in the market, nobody wants to buy. It's as simple as that, but of course it's not financial advice from me. If you have enjoyed the video, give it a like. If you haven't, don't. Comment down below, let me know what you think of XRP. And I know XLM's on the move as well. We made a video on XLM not too long ago, so go and check that one out. I'll link it in the description. Most of what I'm saying here for XRP also applies. I don't need to duplicate the video for XLM as well. So, yep, not financial advice, guys. Take it easy, sit back, relax, let the market do the work, and I'll see you next time. Cheers.